No matter what you're in the business of or what industry you're in, the best way to grow your business is always going to be to acquire more customers, get more business, and bring more revenue in the door. And of course, everything can grow within your business after that. Now, when you're in the construction business, there are a few things that are important in regards to you being able to secure more customers, more business, and make more money. That's going to be your ability to get the equipment that you need to do the jobs on the projects that you will be taking on, the ability to have the workers to do the actual work that needs to be done. Once you have, those bids or those projects already acquired, and you also have to have the materials needed to do whatever the job requires. So without those three things, then you won't be able to make that much money in the construction business. So acquiring those, or your ability to acquire those things and maintain those things, is what's going to lead to you being able to grow your business and, get more projects, bigger projects, and all of that. So basically, it is directly correlated with how much money you are able to bring in, which ultimately you're in business to make money. And if you're not doing that, then I don't really know what you're doing. Now listen, I am no expert in the construction business, or nor do I have experience specifically in the construction business. But the reason why you should stick around and listen to what I'm going to share with you today is because I am actually an expert when it comes to financing, when it comes to things in regards to funding and your credit and all of that stuff. So I also used to work at Wells Fargo Bank a long time ago. So I have experience with what happens when you are submitting those applications to get some of the funding that you need to actually grow your business, especially in these areas that we're talking about today. I'm going to provide you some solutions to this, as well as going through, some of the metrics you need to look at, or some of the things you need to look at in regards to if this is a good idea for you and your business or not. Now, some of you guys might be, bigger construction companies. Some of you guys might be smaller, just getting started, but this information is going to apply to whatever situation you might be in. And if you want to make sure that you are in tune with all information that I provide in regards to being able to obtain financing and funding for your businesses or on the personal side, make sure you like this video, subscribe to the channel, and turn on notifications so you'll be notified anytime I drop a new video just like this one. So in order to make sure you have those three things that you need to take on more, business in the construction industry, which was your equipment, your workers, and of course your materials, then of course you need to have access to it. Now, one way that you can obtain this, and a lot of you guys like to do this, is using your cash. Cash is king is a motto that has been around for quite a while, but I will say that it is a bit of an outdated motto, and especially in regards to when it comes to your business. Now, if you are solely relying on the cash that you have in a bank account, the first thing that you want to think about in regards to you being able to take on more projects, bigger projects, and all of that is, do you have enough cash? So do you have enough cash in your account that you can use to finance the materials, the workers, the equipment that you need to take on this particular job? And if you don't, will you miss out on a job because you don't have enough cash on hand to be able to take care of that? Now, another thing in regards to you using your cash is, are there, really big job offers that are out there that are requesting bids that you can't take on because you don't have enough cash to take those on? Or is it that, you might have enough to get the actual project that you want to do, but can you get multiple projects which could bring in more money for you at one time? If you don't have the resources available to you to get everything you need to do that, then that can also hinder you from making more money. And another thing to think about, if you have enough cash to, go ahead and do all of that, should you use up all your resources? Because once that cash is gone, that's pretty much all of the cash that you have. Or do you want your cash reserves to take a big hit, especially with what's going on right now? Do you want your cash reserves to take a big hit and you not have enough money available on hand that you have access to, when you could do it a different way, where you can still get what you need without having to sacrifice your cash reserves? And those reserves can especially come in handy, of course, as you probably know, when you're waiting on payments to come in, as long as that can possibly take. And you want to make sure that you have enough money on hand to cover whatever might be necessary at the time, especially knowing that sometimes jobs might go over budget, and you might overspend what you actually thought you needed before, and you need extra money for that as well. Now, some of you guys might be like, okay, I'll go ahead and just use my personal credit, and that should solve the problems, especially when you have a smaller construction business getting started. So in that instance, you can use your personal credit, of course, but there are a few things that you want to be wary of, because that can actually have a lot of negative effects. Well, first off, you can't get as much money using your personal credit as you could using, your business credit or more of a business type of funding product, compared to a personal funding product to try to fund projects that you're doing currently. And, you can get up to 10 times as much in credit limits going through business products versus personal products. Not to mention, if you do get a personal product, especially if it's on the business end, it's usually going to have a personal guarantee depending on where you go to get the funding. And with it having a personal guarantee, it may or may not be on your credit report. And if you get a personal funding option to fund whatever you're doing for your business, it definitely will be on your personal credit. And that can usually be for large amounts of money because you're doing stuff through your business, especially in construction. So that can really weigh down your personal credit and your personal credit score. And if you need to do anything personally within your house, it can hinder you from being able to do some stuff that you might just need to do for yourself or for your family. So that's another downfall to actually going the personal credit route when you're trying to do this. And some other things to take into consideration might be things like supply chain issues. So, being able to obtain the materials that you really need. And if any of that might be, slowed down. And of course, you want to be able to secure everything that you need before you get started on the project. It could also be issues with the rising cost of materials, with the inflation happening and everything. And of course, if you have the ability to have access to more money, then you can possibly get a larger amount of materials and get discounts based on you ordering more than what you would have using your own cash reserves or using a smaller amount of funds available to you. And of course, as we know, the more you can save on materials, the better of a bid you can put in, because you can have lower costs to yourself while still delivering the quality that the client is going to want. And another thing in the current time frame, of course, like I mentioned, inflation, you want to be thinking about the rates of funding going up. Now, with the rates of funding going up, that hinders some people from thinking, hey, should I even apply for financing right now? So you really can look at it in that way, but you also want to look at, okay, if I don't take the financing I need to get these jobs or to get these bigger jobs or to get this larger number of jobs, then, how much money am I going to miss out on receiving because I didn't actually get the stuff that I needed to be able to take on these projects? And I might only be able to take on a limited number of projects or a limited size of projects. So I won't be able to bring in as much money as I could have while the interest rates are where they are, because we know that they're going up. So the longer it takes for you to actually get the funding, the more it will cost you later. And if you know you're going to need what you need to take the business that you're going to take or to acquire the business you're going to acquire, then, it's better to do that now before it goes even higher in the future, if you know you're going to need to do it anyway, especially because it's going to help you bring in more money. So basically, it's like the opportunity cost of, what is it going to cost me to not be able to not get funding at this time versus getting it later on down the road when I really see that I need it. So of course, the answer to solve these problems, which are going to help you ultimately grow your business and bring in more money so you can do more work and get to that place that you're trying to get to, financially with your business and all of that, you more than likely might need to take out some financing to handle all of these costs up front, make the money, and then of course pay the loans back once the money comes in. Now, one thing that I want to tell you guys, and again, I'm going to have a solution for you that's going to help you to acquire that financing. But if you want to check it out early, go ahead down to the description of this video and you can see what I'm talking about. But stick around and I'm going to give you more details in just a minute. But first off, I wanted you guys to take a look at this. So the problem that most businesses face in construction as well, when they are going to get their financing, is most businesses in general just go to the wrong places to try to get their funding, and they don't get the funding that they need, or they don't get as much funding as they need, and that of course is going to be a big problem. Now, like you can see here, based off of this survey, you can see that most people as far as where they go to apply, sources apply to for funding is usually going to be a large bank. That's where most people are going. And then second to that is going to be small banks and then online lenders. Online lenders is the third option, but you can see here that people that do go to online lenders, 38% of them have medium to high credit risk. So online lenders are helping a lot of people that have medium to high credit risk, as well as people that have low credit risk. So really, high credit scores. But more people with lower credit scores and issues with their credit, their credit might be in the middle somewhere, they are going to online lenders mostly. Whereas the majority of everybody is still going to large banks to try to get their funding. So this is where people are going to obtain their funding. Now, nothing usually is going to sound wrong with this. This is going to sound like the thing to do, right? This is what everybody does. But when we take a closer look, you can actually see something that's very important for us to be aware of. And that is, you can see here, loan, line of credit, cash advance applicants approved for at least some financing at the sources. So this is going to tell us who of these sources is actually giving out the most money to people. And you can see here, finance companies and online lenders are actually the top two as far as giving out money. So people that do apply at these places, which are not the common places that most people go to, more people get approved there at the less common place to go to. And the place where everyone is actually going to is giving out the least amount of money. So everybody's going to the place that gives out the least money to apply because it's what has been normal, versus everybody else who has figured out, well, let me try some alternatives. So of course, most people, as we saw with the medium to high credit risk or lower credit, they're going to have to try to go to some alternative options because we know the bigger banks aren't going to be more willing to give them funding. So because of that, they were actually able to give more money than people with higher credit scores, which might sound crazy, but it's all about where you go to. So you can see here, again, that it's better to go to alternative sources if you want to actually have a higher chance of getting approved versus going to the traditional methods that most people go to. So of course, this isn't me just saying this to you. This is, statistically shown to be how it works out when people go to get their financing. Now, because of that, you want to take that in consideration where you go. So what I want to do for you today, so that you can try to be able to secure that financing that you need for your business, and it doesn't matter how much you need. It could be, $5,000. It could be $200,000. It could be anywhere up to $5 million with the company I'm actually going to show you. So however much money you need, you should be able to get access to it, and they can work with you regardless of what your credit situation is. And there are some differences in regards to how much revenue you have to make and how much time you need to have in business. So this can help a lot of people. So definitely stay tuned for this next part to hear what I'm about to say. So today I'm going to tell you guys about a place called National Business Capital. Again, there's a link to them down in the description if you want to check them out. But they can help you out in quite a few different ways when it comes to the things that we were talking about, like getting your equipment, getting your workers, and getting your materials. So take a look at this. They have financing for equipment, right? So with equipment financing, it's good to get specifically equipment financing versus getting a loan or getting a line of credit, because you can get a lower rate because that specific funding option is going to be secured by the actual thing that you are getting, the piece of equipment that you need to get, or pieces of equipment that you need to get. So that means that you can get that at a lower rate and still have the options open to you of getting a line of credit or business loan. We'll talk about that in just a second. So that's definitely something that you want to do. Now with equipment financing, they have a very good option available. You can see here, there's no minimal time in business required. So that's of course going to be good. And also $120,000 in annual gross revenue is what's required revenue wise. However, if your credit score is 650 or higher, there are no required sales minimums. So there's no minimum as far as income, which this is about $10,000 a month. If you have good credit, then you don't have to worry about this. Now, as far as when it comes to credit scores on the equipment financing, usually it's no minimum credit score. So, that's of course going to be a good thing. But if you make 120K in annual gross sales and have been in business for 6+ months, then this is going to be a good option for you. So basically, you need to have the income requirement and, a little time in business. If you don't have a good credit score, so for them to not, look at you based off the credit score, you need to be making the income and have some time in business. If you basically have a good credit score, then you don't even have to worry about that minimum income requirement, right? So this is, of course, going to open up the door for a lot of you guys in regards to getting your financing for your equipment. And then, of course, like I said, we still have the other things like your materials, and we have your workers and all of that stuff. So they still have you covered there as well. So you can see here, they have business lines of credit with a 90% approval rate. Now, this will be really good if you have employees, because of course you can pay them off of the line of credit. You can wait for the money to come in, pay that line of credit down, and then when it's time to pay them again, you can always have access to that line of credit to use off and on to pay for your employees, as well as your materials to get it in bulk, get the discounts on that, get everything that you need, and be able to actually, do the work that needs to be done, because you have your workers, you have your equipment, your materials at this point, and your equipment. So everything that you need, you can get with these two things, of course. Now, when it comes to what they're looking at for this, first off, of course, you can get funded in as little as 24 to 48 hours. So it's not as much time as it takes at a traditional bank, as well as they don't require as much paperwork. It's usually just 3 months of bank statements. You don't have to have a lengthy application. The application just takes a few seconds to complete as well, and they don't require, your whole life in financing documents as well, just to get you funded. And they can give you for the line of credit anywhere from 25,000 to 5 million. So of course that's going to be amazing. And just to show you really quickly, down here you can see compared to traditional banks and direct lenders, this is how they stack up. Usually it's going to be 2 to 3 years of tax returns and financials at banks, 3 to 6 months bank statements, a year of tax returns, 1 year financials. As far as paperwork, they require 3 months of bank statements, no tax returns required, 1 page, 1 minute application with DocuSign. And instead of going directly to one lender, they have 75+ lenders. So that means that you get to have options on what's available to you. If you go to a bank, like I said, I used to work at Wells Fargo. If you go to Wells Fargo, Bank of America, Chase, you can only get what they have to offer you. Or you can go somewhere that has several different options to make sure that you're getting the best option in regards to what you're getting for your funding. There are a bunch of different other benefits, and they do soft pulls, so no hard credit pull. You don't have to worry about getting a hard ding on your credit, and that can of course help protect your score too. So that's another benefit of taking an option like this. Now they also have small business loans, so that's something they can help you with as well. So just taking a look at the requirements that they have for that here, you can see 1 year in business is required for a loan. That 10,000 monthly is also required for a loan, but a 580+ credit score. So you don't even have to have perfect credit to try to get a business loan from them. Of course, you need to have the time in business, and you need to be making the 10,000 a month in revenue. And then, you're in a good place to try to apply for this and see how much funding you can get. It really doesn't get much better than that or easier than that. So this is definitely an option worth trying out to see, because you can use the business loans if you want to expand your business, if you want to acquire another, construction business, to grow your business that way. So it's a lot of things you can use that loan for as well. So just wanted you to know that they have different options for you, and they really have even more options than that. You can see they can help you with a SBA loan if you want to try to get a SBA loan. Right here, they do accounts receivable financing. They do asset-based financing. So if you have assets, you can actually get financing that way. They do merchant cash advances, franchise purchasing or financing. They do purchase order financing, and they do commercial mortgage financing. So it's a bunch of different options that they have. Again, a link to them is going to be in the description. But this is a great option for you to use to try to grow your business. Of course, get the funding that you need to get everything that you need to take on more business, get more money coming in, and start to grow your business. If you got benefit from this particular video, make sure to give it a thumbs up so YouTube can show it to more people. subscribe to the channel and turn on notifications so you'll be notified anytime I let out any new videos like this. And also thank you for checking out this video and spending time with me, and I'll see you in the next video.